What's up, everybody? I'm Rob.
I'm Reshawn,
And this is Learn, Hustle, Grow.
If you are interested in all things money, marriage, and travel, this is the place for you.
It is said that there are two surefire ways to build wealth in America: investing in the stock market and real estate. A once every 3-year study by the Federal Reserve Board found that in 2016, 51.9% of families owned stock, either directly or as part of a fund.
The study discovered that about 1/3 of families in the lower income scale had stock holdings. In the next 40% of the income scale, about 70% of the families held stock. Households in the top 10% of the income scale had stock ownership rates above 90%.
Basically, the poorest people own the least amount of stock. The middle class are getting the hang of it, and the richest people take full advantage. We grew up with no money, no vacations, pay less pro wings, and free school lunches. We both joined the military and went to college to get good jobs so that we would not be poor. Guess what? It worked.
Getting jobs after college and consistently increasing our earnings allowed us to become part of the middle class. Like most people, we loved making money, but wanted more control over our time. We were working hard, but could never take more than 7 consecutive days of vacation. We needed an alternative to the stressful careers we had chosen.
When it came to building wealth, I was convinced that real estate was the answer.
Yes, he was.
I kept singing the praises of a blog and podcast called Bigger Pockets until Mrs. Lee was ready to get on board. It took her a couple of years to realize the value of this awesome free resource.
I just could not hear it until we had paid off our debt using our modified Dave Ramsey plan. We'll include links to our investing in real estate and Dave Ramsey modified videos in the comments below. While paying off our debts, we continue to invest in our 401k retirement accounts. We also opened an online trading account.
Yes, we invest in the stock market outside of our 401ks and IRAs. Online trading accounts can be opened for free with companies like Fidelity, Schwab, and Vanguard. Their websites have search engines and access to free articles on investing.
Let me start by saying we really do get it. Deciding when and how to invest can be a challenge. Is now the right time? Do I need a financial advisor? Which investments are the right investments for me? Frankly, it can be a bit intimidating.
So, we're sharing how we decided what stocks to buy. Here's the deal. You can begin to invest in the stock market without a lot of money. Sure, we've heard of people investing in real estate with no money. Usually they mean no money of their own. That's another video.
When I had absolutely no money, I met with a financial advisor who explained to me that my net worth would actually be higher if I were dead. Yep, I was worth more dead than alive. At the time, the proceeds from my life insurance policy would pay off my debt and leave behind a nest egg for my young son.
While this is probably true for most 20-something-year-olds, it's not where you want to be long term. If this is true for you and you're over 30 with dependents, then you should definitely be alarmed.
The good news is that as long as you are breathing, you have time to change your circumstances. If you have never met with a financial advisor, review your company benefits to find out if the first meeting is free. At the very least, this individual can give you some feedback regarding your retirement investment options and your net worth.
Even more good news. You don't need a college degree in finance to figure out how money works. Many people will tell you that college business courses taught them absolutely nothing about personal finance. Unfortunately, many business owners do a terrible job at managing their balance sheet.
Although I was a licensed financial advisor between the years of 2006 and 2008, I had no investments beyond my 401k. Today, our 401ks and IRAs are heavily invested in target date and index funds. These funds are passively managed and do not require you to pick stocks. Check out the book, Simple Path to Wealth by J.L. Collins.
Target date funds are low-fee mutual funds that allow you to set it and forget it. We've all heard the term, no risk, no reward. This is true in investing and in life. The further out the maturity date, the more risk in the portfolio. Ideally, as a young investor, you have more time to build wealth and a higher risk tolerance. As someone retiring sooner, you would choose a closer date. The portfolio in your fund would have less risk.
An index fund is another type of mutual fund with low operating expenses. The fund portfolio is constructed to match the components of a market index, like the S&P 500. These funds follow their benchmark index no matter what the state of the market. There is an index and an index fund for nearly every financial market in existence.
In our trading account, we began to purchase 100 shares at a time of companies that we were familiar with. When large companies fall on hard times, stock prices drop. We reviewed the 52-week price range, Morningstar ratings, and how the company compared to others in its same industry.
Online brokerage firms provide research and performance information on individual stocks and mutual funds. After doing our research, we choose what positions to buy based upon the money we have to invest. Just to keep it simple, if we have $1,000 to invest, we would search for a $10 stock or mutual fund.
If there's nothing in our price range, we wait until we have more money to invest or purchase more shares of what we already have. When we're happy with the growth of a stock, we sell and look for other opportunities we can capitalize on.
Recently, this meant selling some individual positions to move into sector funds. Sector funds are industry-specific mutual funds or ETFs. These exchange-traded funds have a lower barrier of entry and low expense ratios. Why not index funds? Index funds are great when the market is down. When the market is high, so are index funds. Vanguard VFNIX is a well-known S&P 500 index fund. At the time of this recording, a single share can be purchased for $278.66.
We own sector ETFs in healthcare, technology, and energy. At the time of this recording, you can purchase a single share of ExxonMobil for $72.64. You can purchase an oil and gas ETF with shares of ExxonMobil and 127 other companies for around $16.32 a share. We continue to focus on the basic principle of buying low and selling high.
Rob and I are buy and hold investors. Essentially, we hold our investments long term, selling when we are comfortable with the growth achieved or when we want to utilize the funds to purchase real estate.
Yes.
We are stock market investors, but not active traders.
There are individuals that offer more information and online courses if you are interested in becoming a stock trader. Check out Tila Holcomb, the Black Market Exchange, or Invest with Terry. We'll put the links below.
Should you decide to buy and sell individual stocks, make sure you understand the profit equation. Profit equals revenue minus costs. There are fees associated with buying and selling a stock. You will also be responsible for short and long-term capital gains taxes when you file your annual return. As an active trader, if you are not careful, fees and taxes may eat up any profit you might receive.
Keep in mind that personal finance is exactly that. What works for us may not work for you. Neither of us are licensed professional advisors today. Rashawn's brokerage license expired years ago. We are simply sharing our experience in hopes that it might demystify the idea of stock market investing.
If you got any value at all from this video, don't forget, like, subscribe, and share.
See you on the next video.